One of the most frustrating things that can happen to a small business owner is when you get to the end of the tax year and you realize you don't have enough money to pay your tax bill. Maybe it's been a great year and you've had tons of profit and you've celebrated and you've reinvested into your business and you've taken money home and you've done all the fun things with the money, but then you realize you actually don't have the cash to pay the tax bill and your CPA is telling you, hey, you've got this big bill, and you say, I don't actually have the money to pay that. That is one of the most difficult things that any business owner can run into. And I want to tell you guys how you can avoid that with making sure that we have enough money saved in our tax savings accounts. So this video is all about helping you figure out how to set up a tax savings account and functionally how to use it, because you can have a savings account, but not knowing how to use it isn't going to help you. You need to have some rules and know what you need to do to be able to save the money in the tax account throughout the year. Okay, so that is what this video is. I'm going to actually show you real financials. We're going to look at them and we're going to show you actually how to transfer money into an account as well, just so you can really practically see and tie together. This is the action that we're talking about because I want to make this very, very, very tangible for you. Before we go any further, I want to tell you about today's sponsor, and that is Relay. So Relay is a modern banking platform made specifically for small businesses. Relay is a way that you can do all of your banking virtually and digitally. You can set up new accounts, you can write checks, you can pay your vendors and your bills, you can receive and send wire transfers. There's really pretty much nothing that this banking solution cannot handle when it comes to your small business banking needs, okay? So if you're interested in learning more about Relay, you can go to claracfo.com/relay to learn more. And you can also see everything that it can do for you. And we did also do a walkthrough video of Relay so you can really see it. And we're actually going to show it a little bit later in this video as well, okay? So be sure to check out more by going to claracfo.com/relay. All right, well, let's talk about taxes and saving for taxes. So first of all, how do we have any idea what our tax liability might be in the future? There's always these jokes about like the IRS saying like, we don't know how much we're gonna, or there's always these jokes floating around about how the IRS kind of holds back like what we actually owe in taxes and we're supposed to kind of be figuring it out, but we don't really know until the report is filed or their tax return is actually filed. So it is a little bit of a tricky situation altogether. I agree. Now, but what we do know is if you have financial statements and you are doing your financials on a regular monthly cadence, which all of us as business owners should be doing, we will know our profit in our business, and our tax liability is largely based on what our profit is in our businesses. Now, we have lots of other things that can happen in our personal tax return. So you can have your income coming from different businesses. Maybe you have a side hustle and then you also have a W-2 wage, or maybe a spouse has a W-2 wage, or maybe you have a rental property or you have other businesses. All these different things can change your tax situation. So what I want to help you is think about, for your entity, for your business, what is the tax burden that it is creating on your personal life? So if you have a flow-through entity like a sole proprietor, an LLC taxed as a sole proprietor, a partnership, or an S corporation, those are all flow-through entities. So the earnings of the business flow through to your personal tax return, and then you're taxed on the income of your business. Now, what we need to know is that business is generating a tax liability. Let's try to estimate what we think that's going to be so you can save money so you don't get a very big surprise tax bill at the end of the year. And then, you might get a surprise tax bill, but you'll know, hey, I know at least like the business saved the money that it needed to save. I don't know about all the other situations happening in the personal tax return, but at least the business. And that is usually the problem child in people's personal tax returns, is usually that the business you didn't pay enough in estimated taxes in order to pay for that tax liability on the personal side. So usually that is the culprit, because oftentimes we're withholding enough on our W-2s and other things, like we've paid estimated taxes on other things, but the businesses are usually the culprit for not having paid enough in taxes throughout the year that you get the surprise tax bill. Okay, so I want to explain this concept to you, and it's very similar but different to the concept that was mentioned in Profit First. I have the Profit First book back here. It's by Mike Michalowicz. I did read it. I actually don't really want to tell you guys to read it because I'm kind of teaching you something a little different. The way that Profit First works is that it says all the money coming in, you want to separate it into different buckets of money so that you can, have some money separated out for taxes, have some money separated out for profit, and then the rest of that goes into operating expenses that you can use to manage your business finances. But I don't always love that, and I think that actually you can get very far off on your taxes if you do it that way. You could potentially not be saving nearly enough if you are just following some kind of generic percentage on your revenue to pay for taxes. So I don't always recommend this taking a percentage of gross revenue, which is what Profit First says to do. Now, I do recommend taking a percentage of your profit and taking a percentage of that and saving that into taxes, because we all have different businesses. I can't tell you to say, okay, if you save 5% of all your gross revenue, 5% should be enough for your tax liability. No, that's just not the case, because you could have a really high margin business. So let's say if your business is bringing in $100,000 in a year and $50,000 of that goes out in expenses, that means that you have $50,000 in profit. And that $50,000, that's a 50% profit margin. That's really high. If you had only been saving 5% for taxes throughout the year on your gross revenue, you would only have $5,000 in the bank to pay for your tax liability, and there's no way that that would be enough. Okay? Now that might work really well for a business that is maybe more in a 20% profit margin situation. But what if you go throughout the year and you actually aren't profitable at all and you are in a loss position, and yet you've been saving money, 5% of all your cash has been going into a tax account that you're not actually going to have to pay any taxes for. So I don't love the idea of saving on gross revenue for that specific reason. So the way that I do tax savings is I say, and lots of other people do this as well, it's not just me, but it works really well for all of our clients. And this is what we do when they are working with us at Clara CFO. We actually walk them through this. If they're worried about, not saving enough for taxes throughout the year, we look at this on a monthly basis. So what we do is we say every month, how much profit is there? We look at the total, and then we calculate and say that profit times a effective tax rate. I'm going to always use 25% as just like a generic tax rate. So 25%, that is the amount that needs to be moved into a tax savings account. Okay? So if it's $10,000 of profit, 25% of that is $2,500. $2,500 gets practically literally moved from the operating account, where most of the cash is, and gets moved into a separate bank account. So I recommend that every single business owner have at least 2 savings accounts. One is for general savings and one is for tax savings. Okay. Now 2 is plenty for most businesses. You're going to have an operating account. That's your checking account where most everything is going out of, 1 long-term savings account, and then 1 tax savings account. And then you can earn interest on a lot of these accounts. You can definitely earn interest. Relay has accounts that you can earn interest on as well. So you can move money into those accounts and let that sit there. And then on a quarterly basis, on the quarters, the IRS quarters, which are different than the calendar quarters, when the quarterly estimated tax payments come out, we look at that amount and we will pay it to the IRS. Okay. Now, there are some nuances of looking at the full year. Like if you are a seasonal business, you might make a lot of your money in one season and then maybe you go into a loss for a couple seasons. So we can talk a little bit about that. But what I want to do is show you in real practical terms what this looks like for a month of January. And then I'm going to pull up some financials right now for you. And let's just walk through a quick example. And then we'll switch over to Relay and I'll show you literally, this is how I think about it and this is how I do it. Okay. So let's go ahead and get into this construction company financials, and I will show you what's going on. Okay, so here we are in a construction company, and this is just a basic profit and loss by month. So you can see all the months across the top here, and then a total on the end. So what I'm gonna do is I'm gonna scroll all the way down to the net income amount, which net income is the same as profit. And this is the number that we care about when it comes to what is our potential tax liability. Now, there's always going to be a few other things that are going to tweak your tax liability, and especially if you have lots of different income sources on your personal side. But we're trying to think about this simply first, and I'm trying to get you guys to save your money so you don't spend all of it before you need to pay your tax bill, okay? So that's the purpose of a tax savings account, and this is what we're looking at. So let's say in the month of January, they had a net income of $12,114. So what I'm going to do is I'm going to literally say equals that $12,114 times 0.25, which is 25%, and I'm going to figure out what my tax savings number is. And I'm just going to drag that across here for a second. So $3,028.53. Now, do I transfer down to the penny? No, I don't. Usually what I'll do here is I'll look at this and I'll say, okay, $3,000, rounded down, or if I'm going into February, I'll probably round up to say $200. And then maybe in March, I will round this to $1,600. And then this one, I might do $1,350. Okay. So I'm not here to try to get super specific on the pennies, because all of this is an estimate. But what I want to do is just get into this habit of looking at our profit and thinking right away, 25% of it is not mine. Now, if you're in a really high tax bracket, you're going to need to be thinking more about like 35 to 40%. If you're in a lower tax bracket, maybe like 15 to 20 is okay with you. You should look at last year's tax return and identify what the effective tax rate was. Okay, so for some of us, it's going to be around that 25%, and then for some it's going to be lower, for some it's going to be higher. I'm using 25% as an effective tax rate for this video because I think that it's a good average. It's a great place to start if you're not sure, okay? I'd rather have you oversave a little bit because you're not paying it to the IRS. I'd rather you have a little bit more savings, and then at the end of the year, if your tax bill is lower, you can just pay your tax bill, and then that excess money can go be used in other ways, okay? So when I have, let's say in the month of January, I calculated, I do this at the end of the month. So the month of January is over, I look at my profit, and then I say, okay, I need to move money away so I have that saved for taxes and I don't use it. Okay, so what I'm gonna do now is we're gonna hop into Relay, and I'm gonna look at my accounts here. So I have money in my operating account, and I have a tax account here. What I'm going to do is move the money, and you can do this in any bank that you have. I'm just using Relay so you guys can see how easy it is and just really show you practically these are the steps that you need to do. So you'll move your money from, make sure you know where it's coming from. It's going to come from this operating account, and then we're going to move it to the tax account. Okay, and then I'm going to move $3,000 for the month of January, and I'm going to put that in here. I'm going to say January tax savings. And then we're going to click next, and then review it, make sure you're happy with it, and initiate the transfer. Okay, let's go and look right now at what the February profit number was that we want to transfer over. So here we are back in our financials. Let's say it's the end of February, and we've done the calculation. Didn't have as big of a profit month this month. Maybe it was just a high spending month. Maybe revenue was a little bit lower. Didn't make a lot of money, but we're going to go ahead and transfer in, let's say $200, and I'm just rounding. If you want to make it exact, that is up to you. I'm just not a big person on transferring exact pennies for whatever reason, but I like to round. So I'm going to say, okay, the estimated tax liability is somewhere around 183. I'm going to transfer $200 because I underestimated last month, so I'll overestimate a little bit this month. So I'm going to go to 200. I'm going to go back to Relay and make that transfer. Here we are. We're going to move money. This is at the end of February. We're going to transfer money from our operating account into our tax account. And you might be thinking, well, at some point, all that operating money is going to go away if you're looking at this balance. But what would be happening is you would be having income come into your account, expenses going out, and that balance would be ticking upwards with your profit. So then you have the money to transfer out here. So because this is a dummy account, I can't also simulate the income. So I hope you guys can bear with me through that. February, what is this? February tax savings. Next, check it, make sure it all looks good, and then initiate transfer. Okay, so very, very, very practical here. This is not hard. At the end of the month, how much profit do you have? Multiply it times an effective tax rate, and then move that money from your operating account to your tax savings account. Let's do that for one more quarter, and then I want to talk about estimated tax payments. So let's go back to March. March, we had estimated tax savings, or our tax savings goal is $1,634. I'm going to round it down to $1,600. Let's move that money from operating account to the tax account, 1,600, and then we're going to put March tax savings. All right. So now we have $5,000 in savings, just like that. $5,000 has been saved for taxes. And then when we get to paying our quarterly estimated taxes, so that usually happens. So in January of 2023, we would pay a quarterly estimated tax as of April 15th or around April 15th to the IRS. So at that point in time, we would say, okay, how much money do we need to pay to the IRS? Now I have videos on estimated tax payments, so you can go and watch those. I'll make sure to link those. But those when you go to pay those estimated tax payments, now you have money already saved. So you can do the calculation on that worksheet, and then you should have enough in your tax savings if your estimated tax rate was, or your effective tax rate, if you're estimating that high enough, you should have enough in your tax savings account to just go and write the check and pay the IRS for your estimated quarterly taxes. Okay, so I would say this is a really great way to look at this. Now, if you get into a situation where maybe the next month is, it's actually going to be a really heavy expense month, and maybe for the next couple months, you're going to be in a loss position. You can, not, if you have a negative amount here, you cannot save anymore. That's totally fine into your tax savings account. And even if you start to get to where the whole year is actually at a loss position, you can move money out of your tax savings if you want to. Now, I don't really recommend that if you have the cash flow, but if you are at a loss for the whole year and you probably aren't going to have a very big tax liability and your tax account does have money in there, you can look at it at a year-to-date basis when you're doing your estimated tax, when you're walking through the estimated tax practice and the estimated tax worksheet, which will help you calculate that total annual liability. And then you can say, okay, maybe I don't need this money in the tax savings account. I can actually move it over into operating expenses instead. Okay, so when we're paying estimated taxes, you always need to look at the quarter, but then you also need to kind of make sure you look out and say, well, what else is happening in the business? Are we running into like hard times where maybe we don't want to overpay the IRS because we're not actually going to probably earn that much profit this year. So you kind of always have to balance like the cash flow with also holding on to the money for your future tax liabilities. Okay, so I hope that is helpful. What I really wanted to do today is just try to really simplify this tax saving concept, because it's so helpful to be able to actually do it and get into this practice. And I do this in my own business, and money is always there for me when I have a tax bill to pay. So just really helps you sleep better at night when you can do that. And that's what I want for you guys. All right. Well, I will talk to you later. Thank you so much. Make sure you put any questions in the comment section below, and also be sure to check out Relay at claracfo.com/relay if you need a banking solution for your small business. All right. Bye, everybody.